What's going on, y'all? It's your boy Sinister, and we back for another video. Let's get into it. First of all, it's December 9th, and 2025 is around the corner, and I hope y'all really sitting down and putting your game plan together when it comes to your financial game plan to build that road to financial freedom. Let's look at the portfolio. Now, today the market's been crazy. The market's been down, the market been red, and I took a loss today. As you can see, the investment is at $3,653.73. I'm down by $814.92, which is $18. I'm down by $814.92, which is 18.24% today. In the after hours, I came up $1.35, which is 0.004%, and the after hours once the market was closed. And as you can see, the market was in the red today. Oh, it was in the red today. Oh, it was down. It was down. Yeah, it had a little rally. It tried to bounce back, but today the market was down. Now, it was more bearish today with the market. So let me break that down for y'all. You might hear me say, oh, it was a bull market, it was a bear market. Now, a bull market is when the stock prices is in the green and is going up. A bear market is when the prices is going down and the market is in the red. Now, the reason why they use a bear and a bull, for those who might not know, a bull strikes with his horns up and a bear strikes with his paw down. So that's why they use the bear and the bull when they refer to the stock market. So that was today. Let's look at the year to date. I'm up $144.54, which is 4.12% year to date. My buying power is $73.13. Now, the reason why I took a big hit in a loss today is because of my options. And as you can see with my options, I had another TQQ, but I sold it today and go ahead and cut my losses with it. So I'm down today by $364 on my TQQ $82 call option, and I'm down $230. This is Robinhood option contract, which is a $41 call. I'm down by $230. Let's go down. Let's continue. Here's my stocks and ETFs. As you're going to see, the market was red. Look, the market was red, y'all. Now, is this a bad thing? Yes and no. Now, the reason why I say yes and no is due to the fact that when the prices is down in the red, this is when you get to buy shares at a discounted price. When the stocks are in the red, you get to buy the shares at a discounted price. Let's look at Robinhood markets, right? It was down today. It was actually down by $2.15, which is 5.16%. It was down today in the market. If you look at the video before this one, Robinhood was up when I was strolling through the list. So we down to $39.62. Now I remember Robinhood was in the 40s yesterday, $41, but we lost $2. We only went up 10 cents in the after hour. Let's look at the 1 month. Robinhood market is still up $6.24, which is 18.68% in the past month. Let's look at the 3 months. The past 3 months, it's up $20.44, which is 106.40%. Let's look at the year to date. $26.94, which is 211.46% year to date. So this stock is growing. Look at the chart. You look at the chart all the way up. Look at the chart. Look at the graph. Look at the chart all the way up, right? I still got my 2 shares, and my total return is $14.01, which is 21.44%. Let's go and look at Apple today. Now, Apple is up today. Now, Apple is in the technology sector of the stock market. So, for those who don't know, there's 11 sectors in the stock market. Apple is trading at $247.26. It went up today by $3.98. Almost hit $4 today. So it was up by 1.64%. In the after hours, it went up by 44 cents. So you might as well just say it went up $4 today, right? Let's look at the 1 month, which is the past month. It's up $24.36, which is 10.93%. Let's look at the past 3 months. Apple is up $26.44, which is 11.97% in the past 3 months. Let's look at the year to date. Apple was up $60.11, which is 32.12% year to date. Look at the chart. Look at the graph. All the way up. Look at the chart. Look at the graph. It's growing. It's on the way up. Let's go down. I still have my same amount of shares. I got 0.123581, and my total return, you practically could say 56 cents. I'm up 1.86%. Let's go look at VOO, which is the Vanguard S&P 500 ETF, trading at $555.73, and it was down today by $2.84, which is 0.51%. In the after hours, it was down 28 cents, which is 0.05%. It's down. Look at the chart. Look at the graph. It's down, all the way down. This morning when I got up and I was looking at the S&P 500, the S&P 500 was down 0.52% today. Now, what causes the market to go down could be something in the news, earnings, job report, the supply chain. Now, Trump is talking about tariffs. And if you've been watching the news or hearing what's going on, China has been cutting the U.S. out of a lot of things now. China is no longer trying to buy things from the US, and now they go into other countries. That can be affecting why the stock market is down today. Now, tomorrow, I'm hoping when I wake up and the market is open, my stock is going back up. And this is why you got to understand the stock market. This is not a get rich overnight scheme. You're not going to get fast money with this. This is about staying consistent and going through the peaks and valleys. Volatility. That's up and down. The market is always going to go up and down, no matter what. It could be up and then it could be down. Last Thursday, the market was red again. Friday, it rallied back and it was in the green. Monday, today's Monday, back in the red. Tomorrow, it could be in the red and then rally back Wednesday. But the thing for those who's thinking about investing and those who do invest, we know, okay, the market is in the red. I can go get me a I can go and put in my dollar cost averaging amount, which is $25 a week or $50 a week or $100 a week, whatever you prefer to put in. Maybe you can only put $5 in, but that's fine. You're putting something in. Remember, one brick at a time. Build a wall one brick at a time. Don't try to build the whole wall. One brick at a time. Now, let's look at the past month. The Vanguard S&P 500 is up by $4.83, which is 0.88% in the past month. In the past 3 months, the Vanguard S&P 500 is up $55.05, which is 11.00% in the past 3 months. Let's look at the year to date. Year to date, it's up $121.74, which is 28.06%. Let's look at the year to date. It's up by $121.74, which is 28.06%. Look at the chart. Look at the graph. It's on the way up. It's all the way up. Let's look at SCHD, which is the Schwab US Dividend Equity ETF, trading at $28.89. Today, it was down by 3 cents, which is 0.12%. In the after hours, it was up by 10 cents, which is 0.36% in the after hours when the market closed. Let's look at the past month. Okay, it's down by 44 cents, which is 1.50% in the past month. In the past 3 months, it's up $1.44, which is 5.26% in the past 3 months. Let's look at the year to date. It's up $3.60, which is 14.25% year to date. Look at the chart all the way up. Look at the chart. Let's go down. I still got my same amount of shares. I got 11.714859 in shares. My total return is $30.50, which is 9.91%. As you can see, you're going to have days like this. And this is why I wanted to do this video, because I want y'all to see when the market is in the red, don't panic. It happens. It happens. Now, you might be looking at, let me go down. Tesla was up today. Tesla was up. But if you look right here, this morning, Tesla dropped below the profit line. Tesla dropped all the way down to $378.81, 10 minutes after 10. It was down by $10.41. Then for the rest of the day, it was up 66 cents, which is 0.17%. And the after hours, Tesla went up $1.92, which is 0.49% in the after hours. I still got my same amount of shares, 0.024625. My total return is $4.09, which is 73.53%. So the market is going to do this. The market is going to do this. The market is going to be in the red, and go in. You might be like, let's say we want to go in and look at SCHG. Now it's down by 22 cents. So you're saving yourself 22 cents on that particular share today if you bought it while it was down. Or let me find one that has a good down price. Let's see. VGT. It's trading at $639.83. Today, if you would have did your dollar cost averaging, you would have got $4.75 off what the stock was originally trading for, because it's down by $4.75. This $25 you could have put in today, or $5, you wherever you was at as far as how much you already put in, that $4 being down would have probably took you and got you the full share you needed. This is what it is. We down to 3,600 on the investing. That's all right. That's why we building. And I appreciate everyone who's been watching the videos, leaving comments. Thank you so much. I hope this really been helping y'all. And I just wanted to show y'all how I'm building this portfolio. I'm not a financial advisor. I'm just showing y'all how I'm building my road to financial freedom. And hopefully this just sparked your mindset to think different about making your money work for you. Because you know my favorite question I always got to ask y'all. Are you working hard for your money, or is your money working hard for you? That is the question. 2025 is around the corner. Are you building your road to financial freedom? Because the clock is on a countdown before the new year. But before I go, be sure to hit that like button, hit that subscribe button. My referral link, if you like to join Robinhood and get free stock, my referral link will be in the description and in the pinned comments. And I hope everyone be blessed, and I'll see you in the next video.